Hello and welcome to the Chart of the Week. My name is Pete Stolzers and I'm the founder of OneOption.com. Before I get started, I'd like to encourage new visitors to view the introductory videos. If you're watching the videos on YouTube, the introduction is a three-part series. They describe my systematic approach to option trading. To learn more about my approach, please visit my blog. It uses the number 1 in the web address. To try my research products, please visit my research site. The web address spells the word 1 out. Both sites are linked, and www.oneoption.com will ultimately get you where you want to go. I'd also like to mention that on YouTube, the Chart of the Week video is divided into two parts. Make sure to watch the second video since it includes the Chart of the Week. 75% of all stocks follow the market, and that's where my analysis starts. Let's take a look at the market. This is a chart of the SPY, the S&P 500 Depository Receipts. We can see here that the market came into last August, sold off, established a low, and then rallied into October where it made a new relative high on the S&P 500. Since then, the market fell, and we all know about the capitulation low in January. This chart actually does not show all of the data, but the market went all the way down to about the SPY 126 level. It rallied, and then it came back and retested that support level. Since doing so in March, the market had been on a nice steady path higher, but recently it's hit some resistance, and you can see here that the market is starting to roll over. So there's been a little bit of volatility, and this rally has stalled. Let's take a look at the 1 month chart to see if that might draw a clearer picture. We can see that the market ran up to 142, pulled back, and then it surged, and on an intraday basis it almost got up to major resistance at SPY 144. That 144 level represents the 5-year uptrend that was broken in January, so that's a resistance level. It's the 200-day moving average, so that's resistance. And it also is a horizontal resistance level that dates back to April of 2007. So there are major resistance points that are converging right at SPY 144. The market quickly backed off and it pulled back to another horizontal support level at 138. The market was able to bounce off of that level, and now we've come right back down to test SPY 138. We'll take a look at the weekly chart, and here we can see how the market came down, tested 138, rallied, bounced off of 138 again, and today we had a huge rally that basically brought the market right back to where it started 5 days ago. There's been a lot of volatility, and right now we're past earnings season, so we don't have that driving influence. The Fed has been on vacation for the last 4 weeks, and they won't reconvene for another 4 weeks, so the interest rate scene has been relatively quiet. We don't have Fed speak every other day. So there aren't a lot of driving forces, and the market is searching for direction, and it almost feels as though we're in a very light trading environment where the dog days of summer might be setting in. Any little bit of news tends to induce volatility into the market. Now this week I will say that we had a number of economic numbers that came out, and you can see nice rallies and then reversals lower, nice rallies and then reversals lower. There was news this week that some of the financial institutions, MBIA and AMBAC in particular, would have their credit ratings reduced, and earlier in the week S&P reduced their credit ratings on the brokerage firms. So that caused a bit of a sell-off, but ultimately the news has been pretty good. We got lower initial jobless claims today. That provided impetus for the market. Tomorrow we get a major piece of information, which is the unemployment report. I believe that also will come in better than expected, and we should see a rally off of it. However, as far as my market analysis right now, I am not bullish. I'm neutral. I feel the headwinds are mounting. I feel that the Fed has been telling banks and financial institutions to get their capital in order. basically sending them a signal that they will have to raise interest rates in the near future. That should keep a lid on this market, and I do not believe that we will get through that SPY 144 level. In the last week, oil has pulled back. I do believe that those fundamentals are intact, and I do believe that this pullback represents a buying opportunity. So for today, I'm neutral on the market, but I do like oil. I like energy stocks. I feel they present a good opportunity, and one of my searches has been able to pick up a number of energy stocks that are rallying big today. Today we'll be taking a look at one of my setups. It's called BDCE Green Line. That stands for Bullish Day Continuation Early. And as you already know, I have all of my search results organized in a column so that all of the stocks within that column conform to a particular high probability trading setup. In this instance, these are stocks that opened near their low and they're trading near their high on an expanded daily range. The stock has been showing an intermediate term uptrend and it's strong. So mind you, we had oil stocks have pulled back over the course of the last week. Today they started off on a negative note after an oil inventory number came out yesterday. And just to set the table for oil, the oil inventories numbers have been showing a draw, and that's been unexpected. Normally oil prices would surge higher, but recently that hasn't been the case. Oil's actually sold off even though the inventories are dropping. That's had many traders believing that oil has formed a temporary top. So I think that there are a number of shorts out there that are about to get squeezed. Today was a classic example. Oil opened lower, and then by the end of the day it finished $5 higher. The long-term fundamentals are still intact. That's why I like this as a bullish position. So let's see what this search has come up with today. This is my scanner, and it shows you the actual search that we'll be taking a look at, BDCE Green Line. These are all of the different search results, and what I'll be doing is I'll be clicking on these charts, and I'll be taking a look at each and every one of them, and we'll be searching for opportunities.